Yeah, what's up, everybody? It is Tuesday, October 25th. Market was up today. The U.S. has sent troops from the 101st Airborne right on the border of Ukraine. Somebody actually commented about this on my channel yesterday. I find this to be a very disturbing development. I mean, it's just like the United States wants to go to war with Russia head to head. I mean, we have not voted for this. Congress has not voted for this. I don't think there's anyone out there who wants to see a direct war with Russia and the potential, the very high potential now of nuclear war. But the people in charge, that is exactly what they're pushing right now. And it's just outrageous. It is outrageous. Sent the 101st Airborne. Can you imagine if Russia sent elite forces, right along the border of Canada and Mexico, or if they sent elite, China sent those forces, or Iran? I mean, you talk about provocation. I mean, this is, I don't know what's going to be, but it's very, very dangerous right now. Very, very dangerous. And this is really what we should be focusing on. The market's going to take care of itself. The economy is going to take care of itself. By the way, speaking of the economy, today, and you get all this stuff from me first, right? So CNBC was talking about, and I didn't know this because I don't watch CNBC, and I've recommended to you guys to stay away from mainstream financial media, all of it. The Wall Street Journal, CNBC, the Financial Times, The Economist, Fox Business, it's all garbage. It's all garbage. If you want to dumb yourself down, if you want to get stupid, at least in the financial sense and with respect to economics, then be my guest. But I stay away. I steer clear. But a friend of mine sent me some tweets from CNBC today talking about, hey, the macro picture is getting better. The first half was a contraction, and now we're looking at growth in the second half. And I told you that. I told you that a long time ago. And it was also, we see these upward revisions in the Atlanta Fed's third quarter GDP and then fourth quarter. But there's no mention of the fiscal. It's that is completely ignored. Look, rate hikes are still going on, folks. So what is the explanation? We're seeing an upward revision. We're seeing that the contraction in the first half is over, that even mainstream financial media is recognizing right now. We still know that the Fed's going to raise interest rates on November 2nd. They're going to raise interest rates in December. They're going to raise interest rates, I think the next one after that is in February. So the rate hikes are still going, but the economy is back in expansion. And I've explained this a million times. We had to digest that gigantic, unprecedented, historic contraction in fiscal that happened in the first half of 2022. Remember last week when, they were all saying, oh, the financial balances of the government have experienced their largest improvement ever. Record. And I just reworded that, and I told you that that's exactly the same as saying the financial balances of the non-government, that's all of us, experienced its largest decline ever. Same thing. Two things are equivalent. Both are true. Let me put it that way. Both are true. So we had to digest that. There was a period of steep and rapid, I have to say, rapid decline and record, as the administration pointed out and as the news media pointed out, record decline in financial balances. And then I've been telling you, it's stabilizing. It's stabilizing. at a lower level. We're not seeing the type of fiscal support we saw in 2021, but it's positive. These flows are positive. Remember the swimming pool, water coming back up, not gushing up, but, slowly coming back. And that's what made the turn. That's what made the turn. But now the media is like, hey, look what's going on. Hey, things are getting better. Hey, they don't know why. They just conveniently leave out that the Fed is still raising interest rates. Because if they were to say the two things together, right? Hey, look, the economy's coming back and the Fed is raising rates. No, that would be like a short circuit of their brain. Right? They can't do that because that would you'd see smoke coming out of their ears. That would just be like a complete short circuit of their brain. They can't say that because, that does not compute. That does not compute. It'd be like that robot, that does not compute. So they leave that part out. You leave it out. Just say, hey, things are getting better. Hey, we won't tell anybody that the Fed is still raising interest rates and we don't understand why things are getting better because that was supposed to crush everything. Remember, recession. So yeah, that's happening. Folks, I'm very worried about this whole Russia situation now with the threats of a false flag attack, dirty bomb by Ukraine, nuke, sending the 101st Airborne. I mean, these people are who's ever running the show here? We got a bunch of psychopath warmongers. They want to annihilate the human race. I mean, they're really pushing us towards this. All right, what else is going on? So we had that, right? Oh, you know how I've been explaining, and I've explained many times the cockamamie system we have here, with the Fed as a regulatory body or the chief regulator of the financial system, yet the policymaker in terms of rate setting, okay? And you had this situation which started to develop in March of 2021 where the Fed's QE, right, the quantitative easing, their asset purchases were just adding trillions to reserve balances to the point where banks were coming up against regulatory limits, right? The leverage ratios, because they had too many assets on their books relative to their capital, and the Fed was piling those assets on with the QE to the point where the Fed had to create a new facility, this reverse repo facility, saying to the banks, okay, you could stick your deposits, you could stick your reserves over in here. So they had, their own, instead of just stopping the QE, like back in 2021, or just suspending the leverage ratio or the inclusion of reserve assets in the calculation of the leverage ratio, like that's what they did in 2020 during the pandemic. But then when it came time to renew that, because it was expiring in 2021 in March, Congress didn't want that, all right? Congress didn't want that. So they had to come up, instead of stopping the QE, which they just kept on with the QE, so we'll just make a new thing so that we're putting in the reserves and then so you could take them out and stick them over here. I mean, it's cockamamie, ridiculous. So now, in 2022, what's happening? They start raising interest rates, right? They start raising interest rates, so those assets, fixed income assets on the books of the banks, right? Treasuries, MBS, agency securities, all that stuff start to go down in price. That has to be marked to the market, right? So the banks are taking losses on that stuff, and that's part of their tier one capital, right? So their capital is shrinking, In the meantime, reserve balances are still really high, but because the Fed is now raising interest rates, and remember, it hadn't really even begun the QT until recently, like in September, right? So it was still kind of like not doing anything to reduce reserves. So the banks had to deal with the reserve problem, which they were shunting off to the reverse repo facility. Now just follow me on this to the extent of how crazy and convoluted this whole thing is. Okay? These are the people in charge running the show, folks. This is how crazy and convoluted. So the Fed is raising rates. That's crushing bank capital, right? Because they got to mark down those assets. At the same time, the banks want to lend because they see good demand for credit, and that's like an income source for them. So they do want to lend. So what are they doing? They're bailing the treasuries. They're bailing the securities. They're dumping them overboard because they need to free up space on their balance sheets relative to their capital position, which is going down, every week with the Fed, or every month with the Fed raising rates. Right? This is all policy. It's all screwed up policy. So they're selling treasuries. Then the Fed starts to sell treasuries as QT gets going, right? And Janet Yellen says now we could have a problem in the treasury market with liquidity. Yeah, no shit, Sherlock, because now the Fed is selling with its stupid raising interest rates to fight inflation, which is exactly the opposite. Banks have to sell just to be in compliance with the Fed's regulations. So now Yellen is saying maybe we have to come up with a new vehicle or something, or a new entity to buy the treasuries to create the liquidity, to keep like a backstop so the thing doesn't. I mean, how many convoluted twists and turns? This is all ridiculous. Just stop raising interest rates. Okay? I mean, in the first place, they never should have been pumping in the trillions of QE for no reason whatsoever. And continue to do that for, a year. And even when the banks came up against their regulatory limits, that the Fed itself put the banks, in violation of the Fed's own rules because of the Fed's own policies. I can't even think of an analogy, I just can't, but it's because it's the craziest thing. It's just, these people are. Anyway, so that's where we are. So they're thinking, so Yellen is saying we got to come up with something now to stave off a liquidity crisis, which I don't think there's going to be one anyway. I really don't. But I just find the whole thing to be. But look, we're about to have nuclear war with Russia. Anything goes now. Anything goes. This financial stuff, it's like freaking kindergarten stuff compared to the war. It really is. And again, we're back to the normal fiscal flow situation. I said that until probably mid-December. And, we got to see what's going on in December. December is a holiday month, and that's when households spend. Okay? As long as somebody's spending, like somebody has to dis-save. In other words, somebody has to be the net spender. It's the government primarily, but we're going to have a quarterly corporate tax payment in December. We've seen the impact of these quarterly tax payments. They're bad, man. We still get this. We still haven't recovered from the September 15th. We were getting close. We were down. I think I said yesterday we were down to like 6 billion. We're back to like an 18 billion gap, but that's going to be gone by tomorrow. Tomorrow we're going to get a Social Security payment. So that gap will finally take out the champagne, pop the champagne, that September drain will finally be removed. Originally, I said it was going to be around October 6th, but then I forgot about the October personal income taxes due on the 17th. I forgot about that. That set us back by about another 30 billion or something. So now, by tomorrow, it's all gone. It's all replenished. It's all been put back. The swimming pool been made back to the level where it was before that tax drain. And speaking of getting back to the level where it was, JP Morgan stock has recovered all of the declines since that August. Remember that infamous speech by Powell at Jackson Hole? Pain, I'm going to inflict pain on everybody. The pain speech. Remember that? And then that just started the whole cascade. And then we had the September tax drain, and it was like, you know, it was a brutal month. But I kept telling you guys, look, man, you got to just, things will stabilize. Things will stabilize. But yeah, I said that was coming. September's going to be volatile. But anyway, JP Morgan stock has recovered all of that. So that's a good sign. I think that's a good sign for the financials. I think that's a good sign for the market in general, actually. So that's it. I just don't, you know, there's not, I'm focused on what's going on. I mean, on the war. I try not to even focus because it's messed up, man. It's really, really bad. I mean, and there's no one in Congress who was opposing this. I mean, there was a group of progressive Democrats that sent a very weak letter to the White House saying, hey, you know, maybe we ought to start talking to Russia and you know, think of a way that the United States could get involved to mediate, you know, some kind of a settlement and a peace. Okay? And then they retracted it. I mean, come on. This has got to stop. I mean, we're literally talking about, oh man, well, you know what the situation is. So anyway, yeah, that's the craziness that's going on. Like, you know, the Fed does this. It does it to the point where it just, you know, screws everything up, where it has to come up with this new thing to take back what it's doing instead of just stopping what it's doing. Then it's doing something else, which creates other problems, which now it doesn't stop doing that. So the Treasury has to come up with something to counter what the Fed is doing, which it could just stop. I mean, it's ridiculous. It's absolutely ridiculous. I mean, step back for a second and really, I'm sure your friends, your colleagues, your family, they don't see this. They just think like, yeah, we got these people, you know, and they're at the Fed and they're at the Treasury and they're smart and they're educated. And maybe they hate these people because, like somebody said here, you know, all the money just goes to the top. Look, dude, there's nothing we're going to be able to do about that. There's nothing we're going to be able to do about that. The government is captured by big money interests. And I mean, you gotta live in that world. That's reality. All right? And why am I pointing out all this, you know, cockamamie stuff? I don't know. Like, yesterday I did a whole thing on trying to be positive. And I do think that things we talk about, and especially our words, the words we use to emote, to communicate, it's very, very important. That goes towards, you know, your attitude, your mental frame of mind. I'm guilty of it like anyone else. Look, I just made this thing about, you know, this is bad and look at what they're doing. You know, got to focus on something else. Coffee roasting. Yeah, folks, I bought a coffee roaster. Today was my first roast with the new coffee roaster, and it went beautifully. Maybe tomorrow I'll put up a video of it. It went beautifully. It's really cool now because before I was roasting them in a cast iron pan, and you know that worked, but there's problems with consistency. It makes a lot of smoke. It's you know, you just don't get. And now I bought a coffee roaster, and I did my first roast today in the roaster, and it came out really, really nice. So yeah, folks, what are we gonna do? Let's make some money, right? If you make money, you're gonna be okay. I mean, you're not gonna change things, but you're gonna be okay. So learn, educate yourself, develop good mental game, and you'll make money. All right? See everybody tomorrow. Bye.